All right, I hope you all are doing well this weekend. Looking forward to another market update. We're going to be reviewing Bitcoin. We're going to be reviewing the miners, just using Mara as that proxy, MicroStrategy, ETH, SPY, Gold, and Nasdaq today. And as you all recall from the video last weekend, I was talking about another fairly substantial move coming this week, given the action that I'd seen regarding the low time frame accumulation range being broken out of, and now we have on the high time frame our big accumulation range that we've been in, or we broke out of in March. Also confirmed that we have now broken out of. And as you guys will recall, as I've been sharing this chart, this is the Coinbase weekly chart. I've been kind of considering this bull market as a tale of 5 moves, right? As a tale of, and this market started, in my opinion, back in December, January 2019, kicked off with its first impulse, made a correction. That's the second move. A third impulse, made a correction in an all-time high in this corrective move, down to the fourth move. And then our final fifth move of this bull market is in front of us, which I've been claiming we've initiated last fall. And so again, just as a reminder, this isn't financial advice. I'm not a financial advisor. Just use this for educational purposes and do your own research. Okay, so with that, very monumental week, right? As you guys had been tracking that chart, I pretty much have retired that chart from last week. The low time frame daily accumulation range, expecting a fast move from that LPS region, and we got it, and we're out and we're off. Okay, and what do I mean we're out and we're off? Well, if we're looking at the high time frame chart here, and I'm going to zoom in so it's easier to see, and my claim having been this giant accumulation range that we've been in since let's go back to June of 2022. Okay, June of 2022. And just a quick review of the structure. I've been claiming we had preliminary support back here in May 2022, selling climax, automatic rally in August, a spring event marked here in phase C, the FTX bottom where everyone thought it was over, and all we really did was test the channel of this bull market that goes all the way back to 2019. That's all we did, right? Testing of this channel, still intact. Let me zoom back in here. And what else did we do? We had a nice LPS structure. That's a last point of support. Where did we have that structure occur? It was just beautiful, right? It was right at this breakout back test, where the last point of support, and again, this support is this price action, right, that literally preceded it for almost a year. And so that's why it's called the last point of support. And so that was a successful last point of support, broke out of the accumulation range back in March 2023. And, as you guys have been following my videos for a while, this entire range I've been claiming has just been time-based capitulation, nothing more than a sign of strength region above this accumulation base. Just absolutely beautiful consolidation. And, me getting the most bullish at these positions here, right? At these positions here, testing that breakout accumulation zone and claiming that this is none other than this schematic, this type of price action until proven otherwise. We weren't proven otherwise. Okay, we weren't proven otherwise. And so what does that mean? That means that this sign of strength region, once broken out of, you're entering expansion. And we broke out of it last week. Okay, where's the evidence of that? The evidence of that's right here. Okay, the evidence of that's right here. here is basically the top of this SOS region, preliminary support, and you got a breakout. And at this point, right now, as I'm doing this video, RSI is over 70. This is exactly what I want to see in my cycle theory, that we are at the end of this current cycle. I've been claiming that we only had RSI get into 70 on 2 other occasions within the cycle. Every previous cycle, that's happened at least 3 times, okay? At least 3 times. So that's another point of confirmation for me, which I'm really pleased to see. And so now where are we? We're at a breakout. And unfortunately, the market is going to force a lot of hands here in expansion. And what specifically is expansion? What does that mean? That just means that TA, that traders, that sideline capital that are expecting, let's say, a retest of this breakout range, before resumption, I believe are going to be waiting, and they're going to be chasing it higher. And why do I say that? Well, with powerful moves like this, you generally do not see retests. You see the beginning of more upside, and that's expansion. And what does specifically expansion mean? Expansion means that no matter what traders attempt to do, or folks that are able to suppress price, there simply aren't enough coins to do what people are trying to do within the context of this open market, this free market, and that's overpowered by the demand that's coming in for the asset. And so this move, in my opinion, is just getting started. Let me give you some evidence for why I believe that. Move this out of the way, and all I'm really concerned with is the in this next part of this tutorial here is tutorial. That's kind of funny that I use that word. But in this video is this current cycle and the signature of the powerful moves, the impulses, okay? The signature of these specific impulses within this cycle. And so what am I going to look at when I'm formulating and trying to assign a probability to what I believe is going to happen next? I'm going to look at areas where RSI just started to get into overbought on the weekly time frame. Okay, so we've got 2 areas right there, and now we're entering our third. And so what was price doing, or what did it do when it entered overbought on May 6th, the week of May 6th, 2019? That's this candle here that I'm circling. What did it do the week of October 26, 2020? That's this candle that I'm circling. Well, price back in 2019 went from the $5,000 range to the $13,000 range within a couple months. Price went from $11,000 range to $58,000, $60,000 within 6 months. Those were the beginnings of the powerful moves. And so my expectation here is no different. We've got an overbought RSI on the weekly, and my bias here is for continuation moving forward. And so I'm going to get into what moving forward looks like in my estimation next. And let's go to the low time frame. All right, this is just a 4-hour chart, consolidating here. And attempting a breakout of this kind of pendant-like structure. And it looks like it's breaking out, kind of as I'm doing this video. My expectation is this is the consolidation. We don't want to see this to consolidate, through next week. That's not the sign of a powerful move. I want to see this consolidation end really right now. That's what I want to see. Again, I don't know what this path is going to be short term, but given what I'm seeing and my expectations in the market, my expectation is that we get to the 40s next week. I could be wrong, but that's how I'm reading the short term. Okay, next chart. My cycle count. My cycle count, again, has still not been violated. I redrew this area. A guy that I follow on Twitter who's much more, who I respect a lot in terms of Elliott Wave, noted this region here being a WXY correction. And after kind of further research, I think he's right. And I think the two we made here at our local low, and now we're initiating this third wave of the macro fifth wave of this cycle. And so my expectation moving forward from here is a fairly substantial move over the next month or two that takes us somewhere between 70 and $110,000, $120,000 before any substantial correction back to that 65, 75 range. And then final resumption of this fifth leg anywhere over 165 to 265 range. All this happening in my mind, in my opinion. Again, I don't know what's going to happen, but that's my opinion. All this happening prior to the halvening, and likely most of this move wouldn't shock me if it was done before the end of the year. Could spill into January, February of next year as well. Now let's look at MicroStrategy. Again, this chart just looks pristine, right? There isn't really that much to update here other than we broke out of this consolidation range that we'd been in since July, very closely mimicking the action that we saw here in this impulse back in 2020, 2021. I love, here's what I love about this chart. Let me believe this is our 30-week. Yep. So we faked out a couple times below the 30-week. Let me zoom in. We faked out a couple times below the 30-week. We got a reclaim, broke out of this flagging structure, and now it's moving. Stayed above this weekly cloud, and so again, just another sign that we've got multiple points of confluence across multiple BTC derivatives. Next, miners. Okay, this is Mara. So last week was a good week for the miners. Okay, I know it might not seem like it from the action compared to Bitcoin, but from a structural perspective, the move in my mind was significant. And you remember me talking about us rejecting this cloud region for 1, 2, 3, 4 weeks, but having this reversal candle, this inverted hammer on the weekly, okay, and needing to see confirmation of that the second week after it happens, not the following week, but the week after, looking for confirmation of that reversal. And so what do we get? We got a really strong start to the week, retrace most of that candle, but we're still in, we breached this cloud. Okay, we breached this cloud. We're back in it. Obviously, Bitcoin is doing well this weekend. And so it'd be great to see a gap up back into this cloud on Monday, and then some continuation. And I think this continuation really kicks off this next leg for the miners. I really do, in terms of this count, in terms of what's next. First impulse, could take us, could almost double these things in short order, and then correction, and then they're off to the races. So this chart looking very constructive to me as well. All right, let me pull up. Oh, there we go. All right. No. Come on, get me. You guys don't see this bar at the top for my Zoom. There we go. I need to kind of get that out of the way. I'm trying to pull up the SPY chart and it's hidden. Okay, there we go. Sorry about that. All right, so the traditional financial markets. This is an area where I've been, I just haven't been making great calls. The Bitcoin calls have been solid in terms of my expectations. The traditional financial markets have not been as solid in the short term. In terms of my projections, I'm just gonna just be completely honest about that. But I think we're close. I think this thing is close to reversing. I don't see anything major that has, violated bull market structure. We're still in an uptrend. Okay, we're still in an uptrend. And if we go all the way back, let's just go back to our COVID lows and see if we can't see something here. So our COVID lows. Yeah, we breached that trend line. But again, I'm not a trend line type of analyst. I believe, again, we're in uptrends. This is the 365 day moving average. And this has been a very, very consistent on the daily time frame indicator of what kind of section of this market we've been in, right? So if we go back and look at there, here, what do we notice at those points? We notice the difference between still being in a bull leg and being in rejection in the corrective leg. Okay, and so as of right now, we are still in, my estimation, in this bull leg. This is a nasty correction. One thing I know is the nastier the correction, the propensity when in a bull leg, and this is the key here, when in a bull leg, to make a V-shape, very quick snapback recovery. And so could we get down a little bit lower? Of course we could. Am I calling this reversal here? I tried to call the reversal last week or even the week before, and I've been wrong. So all I can say is what I'm expecting to happen is the next macro move is this. Okay, is the next macro move is this, and we'll be hyper aware of what happens obviously next week, and I'll be updating that in the video as well. All right, this is the first time I've done an IWM chart. Okay, and the reason I'm doing IWM, this is the Russell 2000 ETF, is very important. Okay, because from a technical perspective, this chart is telling me more than SPY is. Okay, this chart is very revealing to me. It demarcates exactly, I mean, going back to 2018, right? There's very clear section of this market and two tails of markets, right? Two tails of markets. And so as of right now, with how poorly the Russell has been performing, we're still in a triangle. Okay, triangle consolidation structure above macro support that goes all the way back to 2018. So until proven otherwise, this area is support. This area is support. This area is support. Could you get a little breach fake out? Of course, we see that all the time and go. So I'm still operating under the assumption, based on pure technicals, that we are simply consolidating above a breakout range that goes back 5 years, mind you, 5 years. And also, what do we also observe on this chart? Let me point out what RSI is doing. Okay, and why is this important? Things can go from oversold to extremely oversold, right? This is never a this has to happen or this is going to happen. But where is price? Right? Where's price? Where was price here? Okay. What did it do after we hit these levels? Right? We got a snapback. Where was price in that same range back here? Okay. It was much, much, much lower. Okay. Where was it in that same range back here in December? It was much, much, much lower. So again, just another point of confluence. Doesn't mean it has to bounce next week or this is anything that's a guaranteed, just another point of confluence with the overall thesis. Now let's look at the Nasdaq, okay? This is a weekly chart of the Nasdaq. This one I did mention us as a possibility, this is 3-4 weeks ago, kind of testing the bottom end of this channel, okay? This is one where I did see a potential for this technical setup. And I talked about that up in this region, right? as a potential to come back and test and form a bottom end channel. And that's kind of what we're doing here. And again, RSI, right? We're making a lower low. We've got a higher RSI here where price was lower. So that's a, you know, that's a hidden bullish type divergence. And so, you know, does it have to move next week? I think it kind of does. Honestly, I think, you know, it doesn't rule out more down to start the week, but I think from where we are, this needs to move in this zone, right? There isn't much more room. There isn't much more room for downside to keep this bullish structure intact. And what do I mean by that, right? This zone that I've kind of marked out with this horizontal rectangle, you've got a cup and handle forming, you've got a handle kind of back testing in this region. This is where the majority of this price action took place, right? Really, the majority of this price action took place in that region. And so I really want to see this bounce to confirm the bullish thesis for the Nasdaq and TradFi markets, which I still hold. Nothing has changed in that interpretation for me. Gold, well, gold is doing what we've been calling for it to do. Okay, gold has been acting as I've been projecting. I've been claiming that, and this is a monthly chart of gold, that this is just a massive triangular Wyckoff accumulation spring event, right? Very nice spring event at a key critical structure, kind of like Bitcoin did against a trend line that goes back 20 years. And so, you know, we got a last kind of point, LPS structure here, LPS, and then we got a backup LPS, BU LPS. That's a backup to the last point of support. That last point of support being this region down here. And you got a strong reaction. You got a strong reaction. This monthly candle is now engulfing 1, 2, 3, 4, 5, 6, 7. It actually, this is right now we're at the highest monthly level we've ever been with gold. Is that right? Not ever been with, right? We did touch over 2,000, but in terms of right now where the close is, if it were to close a monthly right now, this has engulfed everything that's preceded it. And so that's a very, very powerful indicator in my mind that tells me that the next move here is much like Bitcoin. The next move is a breakout. This has not left the breakout range, the accumulation range, like Bitcoin has, but it looks to be entering expansion to me. All right, let's look at ETH. ETH, I called for a big move, really big move was needed, right? I was a little unsure given how this was kind of dragging out for a while, really dragging out for a while. But we had this Adam and Eve double bottom. We got this cup and handle type formation. We had this ascending triangular structure. I've got the 30-week right now. We're right under that 30-week, literally pressing up against it. We're coming out of this cloud. We dropped out of the cloud. So, you know, for me right here, it needs to move. And I'm looking for another major move in ETH, right? To bust through this 30-week, really break out of this entire, you know, accumulation range, because it hasn't broken out of it. It has not broken out of it yet like Bitcoin has. And so that's what I'm looking for in terms of ETH. And now back to some of my favorite charts. Bitcoin against all the traditional financial markets. Why I'm the most bullish on Bitcoin as an asset class is kind of confirmed in what I'm going to show you next. And I've been posting these on my Twitter for months. But Bitcoin measured in gold, Bitcoin measured in Nasdaq, in Nikkei, and SPY. All these things tell us important things. They're very important signals for me. This is Bitcoin measured in gold. It's breaking out against gold. Okay, let's do this with Nasdaq. Okay, Bitcoin measured in Nasdaq. What is it doing? This is a breakout, right? This is a confirmed breakout on the weekly time frame, right? I mean, that is just very similar to what we saw back in the fall of 2020. So very, very much bullish indeed. When you look at, now I'm not the only person that sees this data, right? I'm not the only person that sees this data. So if you kind of combine, what the market is now seeing as the strongest asset class in traditional finance, and I don't even know if you can consider Bitcoin being an asset in traditional finance when there isn't an ETF, a spot ETF, but it's certainly recognized. And there are certain ways that they can accumulate, most certainly. And this is only going to make that case stronger, in my opinion. It's Bitcoin against the Nasdaq. Let's do Bitcoin against SPY. Look at this, the Bitcoin against SPY breaking out, complete beautiful retest, and it's gone. And then let's do Nikkei as well, because Bitcoin really does love Nikkei, and very closely correlated with how that index has been moving over the last 13 years. And we're breaking out against Nikkei, right? We had a retest back here in August 2020, and then it went. We had a breakout retest in October of this year, and now it looks to be moving. So things are looking up for obviously the Bitcoin and the related crypto derivatives, miners, MSTR, obviously the traditional financial markets, the Nasdaq, the SPY, the Russell are looking weak. But again, prior to big moves, things look the weakest. And you guys have been hearing me talk about that with Bitcoin for months now. And we're seeing that come to fruition. So I believe we're going to see that come to fruition with the traditional financial markets as well. Looking for another big week here for Bitcoin, as well as a crypto ecosystem. So have a great rest of your weekend, and look forward to doing more of these updates. Take care.